Global equity markets, including the ASX, surge and the Aussie dollar has its best day in 10 years. National Australia Bank comes in with a record half-year profit and why it might soon be easier to find a tradie. It's Friday, the 6th of May, 2022. Welcome to Fear and Greed, Australia's most popular business podcast. I'm Michael Thompson and good morning, Sean Aylmer.
Good morning, Michael. It has been quite the week.
It's been a massive week.
We've got all sorts of economic news. We've had all sorts of corporate news. I can't believe it's Friday already.
Oh, do I sound happy today, Sean? Because I'm very happy it's Friday.
Yeah, I'm really happy. I'm really happy. It's been such a big week, but you get to a weekend like this and you kind of need a day or two to actually get over everything, and then it's Monday again.
Yeah, then we're straight back into it. And look, I think we've also got the Saturday edition as well. So, I mean, we do our best to not give you a day off. You can have Sunday morning off. How does that sound?
Well, the Saturday edition, or the weekend edition, which comes out tomorrow morning, of course, is basically you and I competing ferociously about our favourite stories of the week and the biggest story of the week and the most remarkable and sleeper story. But now that Safe Word, our used to be Sunday podcast, is out on a Thursday, we all get a day off. I like that.
Oh, it's nice, isn't it, actually? And just that's a perfect reminder. And thank you. You kind of served this up to me, Sean. The opportunity to go and listen to Safe Word. It came out yesterday. You got to search for Safe Word by Fear and Greed on your podcast platform. Really, we cover a lot of terrain in that show. Yesterday, we talked about everything from would you catch one of these 20-hour direct flights from Australia to, well, anywhere in the world, all the way kind of through to the behaviour that is tolerated within businesses these days. And having a few we went to some weird places as well, didn't we?
A little uncharted territory stuff.
Yeah, that's right. Anyway, look, you can find that wherever you listen to podcasts, Safe Word by Fear and Greed. We've also got a great interview coming up today after the show here. You're speaking to Scott Penn, the founder and CEO of Digital Wellness.
Yes, great story. The whole great family story. They brought Weight Watchers to Australia initially in the 1980s, and they've been in that health sector ever since, and they've done very well. Scott is a charming guy as well. So good interview to listen to after the show.
Yeah, it's a good one. The Penn name is a fairly famous name in that space, and also in the sporting sphere.
Rugby league, yes. He's a part owner of the Manly Rugby League Club, which is sort of an arch enemy to one of my favourites and the team that my children go for. So let's not talk about that.
All right, I might have found a little sore spot there for you, Sean. So we'll move on. We'll move on to the main story today, and it's a big one. This is a cracking story. Global markets we're talking about. They reacted quickly and, well, very sharply to the Federal Reserve's decision on interest rates, with the Aussie dollar jumping the most in a decade and the local share market rising.
Yes, the most anticipated global economic announcement in years caught most by surprise. Rather than going hell for leather, the US central bank, the Fed Reserve, wants to lift interest rates by not as much as most investors thought. The announcement yesterday had immediate ramifications around the globe. The Aussie dollar jumped from close to 70 US cents to 72.5 US cents, though of course it still remains below the level of about 76.5 US cents of a month ago. Now the reason is, if the gap between interest rates in the US and Australia aren't as wide as expected, at least in the short term, investors will be more interested in holding the Aussie dollar. Therefore, it's appreciated. Great news for anyone wanting to travel overseas, that's for sure. And of course, great news for people buying goods from overseas, probably less so for our exporters.
Yeah, what about the local share market?
Well, the S&P ASX 200 also benefited. It finished the day up almost 1% to 7,365 points. It was pretty strong across the board, with technology stocks leading the way. Funny thing is, Michael, technology stocks are supposed to perform poorly when interest rates are rising. But the fact that interest rates aren't rising by as much was good for technology stocks. Now, the local market had a very strong lead-in from Wall Street. The major indices over there were up around 3% yesterday, having tumbled in previous sessions. All things being equal, a 50 basis point rise from the Fed, which was the biggest in 22 years, should dent confidence in equity markets. Why then did the Wall Street and the ASX jump? Well, Fed Chair Jerome Powell made it clear that he didn't think larger increments, larger than 50 basis points, were needed in the future. Investors took that to mean that interest rates might not rise in the US as much as feared, or certainly not as quickly. So that's good news. Equity markets rose. What it shows, Michael, and this is something that economists always bang on about, and it is true, expectations can matter just as much or even more than reality.
It shows the power of the words then, because if you just took it in isolation of being a 50-point jump, but you put those words with it about the expectations into the future and wow, it changes the outcome entirely, doesn't it?
Yeah, I mean, it's a very powerful thing what the Federal Reserve says or what the Reserve Bank of Australia says. Locally, the Reserve Bank said interest rates wouldn't rise till 2024. That's all changed in the last 3 or 4 months. And of course, they were increased this week. But just the fact that the bank had been saying it would be delayed had actually stopped markets from moving a bit. Of course, that all changed this week. Same deal with the Fed, not going as hard. It's kind of the other end of the spectrum, not going as hard as they thought, as people expected. As a result, things moved sharply.
Just before we go, Sean, I want to ask you about other assets, oil, gold, and of course, cryptocurrency.
Yes. Well, I mean, when the Fed makes this sort of decision, it absolutely affects everything. So cryptos, for example, jumped about 7%. And Bitcoin is now trading just under $40,000 a unit. Brent crude jumped to above $110 a barrel. That's because it doesn't look like the economy, the world's largest economy, the US, will slow quite as much as people expected. Oil up, bad news, of course, if you want cheaper petrol. And gold also rose, and it's trading around $1,900 an ounce.
All right, pretty remarkable day. We'll be back in a moment with the rest of the day's business news. Sean, National Australia Bank delivered a jump in cash profit yesterday to $3.5 billion and upped its dividend, which is, of course, great news for shareholders.
Yes, it was a pretty decent result. In fact, it was a record for its interim period, which is the 6 months to the end of March. Although the group's share price did fall back yesterday, the 4% increase in profit compared to a 3% drop from ANZ announced on Wednesday. The result was about what the market expected. More than the other big banks, business lending is really critical to NAB. It has the largest franchise in the country, and business bank earnings jumped impressively. In fact, they're up 18%. But NAB's home lending business went backwards, and that's something management will want to turn around, particularly in a rising interest rate environment. Inflation pressures drove up costs, just like ANZ, and profit margins were squeezed. There was a decent jump in deposits at the bank, and National Australia Bank has already started putting aside more money to prepare for higher bad debts. So we've had ANZ and National Australia Bank. We get Westpac next week. Commonwealth Bank, of course, reported 3 months ago.
Sean, Anthony Albanese faced up to a business audience yesterday at the Australian Chamber of Commerce and Industry. It's not his natural stomping ground, is it?
Very true. No, it's not really. The discussion, though, unearthed more of Labor's views on business-related topics. He started by saying the Australian economy is crying out for reform. But then when asked, he said he wasn't up for major tax reform. He is up for a discussion on skilled migration and worker shortages. This is a major bone of contention among business leaders. In fact, yesterday, National Australia Bank's boss, Ross McEwen, said the shortage of workers was the biggest inhibitor to growth. And Mr Albanese yesterday killed off the party's pledge to pay super on government-funded parental leave. Now, he did appear earlier in the day to forget details about Labor's National Disability Insurance Scheme policy, but generally he did a reasonable job with the business audience yesterday.
What was the Prime Minister up to?
Scott Morrison said the government was getting intelligence advice about how to handle the deteriorating relationship with the Solomon Islands. It was in response to a spray by Solomon Islands Prime Minister Manasseh Sogavare, who said the Pacific nation was, and I quote, being treated as kindergarten students walking around with a Colt 45 in our hands.
What? Okay. That's an extraordinary statement.
Yes, it was. I mean, he had to pay defence on that, the Prime Minister, but the relationship between the two countries really is at a low ebb.
Sure is. Wow, that is a remarkable quote.
Yeah.
All right, sorry. Carry on, Sean.
No, that's right. Look, Mr Morrison was in Sydney for most of yesterday campaigning on small business issues, but he was also continually forced to defend the government's economic record given the interest rate rise earlier in the week. There was a bit of other news around. There was a debate between the Federal Treasurer, Josh Frydenberg, and his opponent In the seat of Kooyong, independent Dr. Monique Ryan. There was also a debate between Defence Minister Peter Dutton and his counterpart in the opposition, Brendan O'Connor. There was plenty of sledging in that one. Lots on locally built subs, the defence budget, who Beijing would prefer running Australia, etc., etc.
How many days to go now, Sean?
Well, I do believe we have 15 days, but I'm not counting.
No, certainly not. Certainly not. The COVID numbers, Sean, remain really quite high, especially in New South Wales, Victoria, and in WA as well.
Yes, there was a spike in some states yesterday. New South Wales came in at 18,500 cases. That state's Chief Health Officer, Dr. Kerry Chant, said 2 new Omicron subvariants that are driving cases higher overseas have now been detected in New South Wales, and at least 11,000 people across the state have caught the virus more than once. I'd just like to add that at least 2 of those 11,000 are in my household. Anyway, Victoria reported 11,000 cases yesterday, and Western Australia had 10,100 infections. There were more than 8,000 cases in Queensland, 3,900 in South Australia, and 1,100 each in ACT and Tasmania.
Sean, I reckon you must have really enjoyed this week because there has just been so much economic news around, and yesterday was really no exception.
Yes, as you say, it's been a really big week for all the economists out there. Certainly the rate rises in Australia and the US dominate, but the Bureau of Statistics figures released yesterday showed that the number of dwelling approvals fell 19.5% in March, following the massive 42% rise in February. Now, approvals fell most in Victoria and Tasmania. I probably shouldn't say this, but I actually like the idea that these numbers are falling. It's bad for people in the building industry, but it's really, really difficult to get a tradie at the moment. And anyone out there doing a renovation soon, me, now has a much better chance of finding a tradie.
Sean,
that's too self-serving?
It's taken, just a touch over 2 years now. And now you're wielding fear and greed like your personal plaything.
That's right.
Fantastic.
Do you know how much it costs to renovate and get a trade? Just to get a tradie's hard at the moment.
So in essence, that is the reason why you are a fan of this particular set of economic data. You are driven by self-interest. That's okay.
Why do you think I'm so happy this morning? Building approvals are down. Look, also trade balance figures were out yesterday. The March trade balance jumped $1.9 billion to $9.3 billion, and that's on the back of a fall in imports.
All right. We might move right along from the economic data. I never knew that someone could make economic data all about themselves.
Oh, yes.
That is well done. I applaud that. Moving on.
Michael, no, I've got to interrupt. Economics is all about the individual. Self-interest, because economics is like the study of behaviour. Oh, I think we'll have to go into this some other time. I'm about to get on my high horse.
I suspect so. And also it feels like you are now just trying to justify something that you have said. But you know what? I'm just going to let the record speak for itself. You said it before. Let's just move on from that. The AGL energy boss, Sean, Graham Hunt, has accused major shareholder and suitor Mike Cannon-Brookes of making false claims about the energy giant's demerger plan.
Yes, this one's getting a bit nasty, Michael. Mr. Cannon-Brookes has an 11.3% stake in AGL and has started lobbying big investors to vote against the demerger in the middle of next month. According to The Australian, Mr. Cannon-Brookes claimed AGL had not invested in renewable energy. He claimed major banks were unlikely to provide financing, and he said it was out of step with its peers in dealing with climate change. Mr. Hunt returned fire, saying shareholders should focus on the facts, which include AGL's renewable and battery portfolio of 2,350 megawatts. It also supplies some of the lowest cost generation in the power grid, and it's already announced new coal closure dates for its big coal-fired power stations. The AGL boss also had some bad news for consumers, saying surging wholesale electricity prices across New South Wales, Victoria and Queensland will inevitably flow through to higher household electricity bills.
Hey, Sean, how lucky are we for a couple of kind of plain nuts to have two big Qantas stories in 1 week?
Fantastic.
We had the good news from Qantas that they're looking like they'll be profitable again next year and buying a whole stack of new aircraft and talking about long-distance flights. And now they're announcing they're going to buy charter flight operator Alliance Aviation for about $614 million in a move which should help QantasLink, which is its regional arm, compete better.
Yes, now that is according to Chief Executive Officer Alan Joyce. Qantas has held 20% of Alliance Aviation since the beginning of 2019. It's now picking up the other 80%. Mr. Joyce said the fleet of 70 Fokker aircraft would efficiently service resources customers in Western Australia and Queensland. Now, the purchase also gives Qantas access to a large inventory of spare parts. Qantas's share price ended down slightly. But Michael, there's another story coming up which mentions Qantas.
Ooh, okay. What a teaser. I don't know whether anyone else will be kind of listening through for that, but you've got me, Sean. Now, insurer QBE's bottom line, this is an interesting one, is going to be hit by about $100 million due to the impact of the Russia-Ukraine war.
That's right. QBE, which is a global company, has sold some lines of insurance such as political violence, political risk, and aviation insurance. Not quite sure how that's priced, but obviously they're all types of insurance that have been hit by the war. QBE said the situation remained dynamic, which means the number it's put forward, the $100 million, could rise, although it could fall as well. The good news for shareholders was that the flooding along the eastern seaboard of Australia and storms across the UK and Europe had not exceeded the group's allowance for catastrophe claims. Its share price got a real kick along yesterday, up more than 5% after that announcement.
Ratings agency Moody's has warned of a jump in mortgage delinquency rates over the rest of 2022, Sean.
Yes, the market has two big headwinds at the moment. We know that. Rising interest rates and falling prices, at least in Sydney, Melbourne and Hobart. Now, Moody's Investors Services rates debt. And it thinks that mortgage delinquencies, so people not being able to repay their home loans, will rise as interest rates increase. And not surprisingly, it warned that people who have large loans and little repayment buffers will suffer most. Large loans, little repayment buffers. Sounds very familiar, especially after the renos.
It certainly does. Sean, AMP has lost another large corporate superannuation mandate, this time with Woolworths deciding to move its employee fund elsewhere.
It's been a tough few years for AMP, but yesterday Chief Executive Alexis George said the company had begun to see some positive signs of growth and momentum. She was commenting after saying the company experienced $1.3 billion in client outflows from its local wealth management business during the March quarter. It will also have a poor quarter this June quarter because it's lost the Woolworths business. Now, AMP's share price closed up nearly 2% yesterday. It's actually up about 19% in the past 6 trading sessions.
All right, and just quickly, Sean, there were a bunch of profit upgrades or reiterations yesterday.
Yes, just a couple worth mentioning. Real Estate Investment Trust's Vicinity Centres, which owns all the big Westfield malls in Australia, said the March quarter had been strong and the occupancy rate was at 98.2%. I think that's pretty incredible given what's happened during the pandemic. And shares in Janus Henderson fell 15% to the lowest level in more than a year after the company released weaker than expected March quarter earnings in the US.
All right, moving on to overseas news. And Sean, you know how you are pretty much my own personal economics dictionary. Any terminology, any jargon I'm not 100% sure about, I turn to you for an explanation. We're going to hear a couple of phrases a fair bit over the next few years, and they are hard and soft landings. And this is because the US Fed's decision to lift interest rates 50 basis points, already hearing these phrases tossed around. What's it all mean?
Right. Well, by lifting rates, the Fed is trying to slow the economy. We understand that. They're doing that because price rises are at 40-year highs. But can they do it without putting the world's largest economy into recession? If they can, that's a soft landing. We like that. If not, if it goes into recession, it's a hard landing. My word, we're going to hear those two phrases a lot in the next 12 months or so. US Treasury Secretary Janet Yellen, who actually used to run the Fed, talked up the possibility of a soft landing yesterday morning. But mind you, she acknowledged the wild card, that is the war in Ukraine, and what that will eventually mean for energy prices. We're going to hear a lot about soft and hard landings, Michael.
We certainly will. German car maker Volkswagen has sold out of new electric cars until 2023, Sean.
Yes, demand for EVs in the US and Europe is huge, helped by government mandates to boost the number of vehicles on the road over the next decade or two. Volkswagen said it had a backlog of 300,000 orders in Western Europe alone. The group, which also owns Porsche, Skoda and Audi, sold 99,000 EVs last year, which is about 1/3 the number that Tesla sold.
And finally, Sean, if you're looking for further signs that things are getting back to normal, Airbus have given us another sign. They're saying it's going to increase production of the A320.
Yes, it will be producing about 75 A320s a month in 2025. Now, the world's largest plane maker posted higher than expected quarterly earnings, and it said it was increasing output of the very much in demand single-aisle A320 models because pandemic travel restrictions are disappearing and people are flying again. Airbus seems to be the favoured airline manufacturer at the moment, ahead of US-based Boeing, its main competitor. Remember earlier this week, Qantas ordered 12 ultra-long-range Airbus 350 jets. The size of these long-term contracts are in the tens of billions of dollars, and companies only commit to it if they're confident things are going to pick up. So, good story to finish on, Michael.
Yeah, absolutely. You promised me another Qantas mention and you managed to squeeze it in right there at the end. So well done. Now, up next is the Fear and Greed Daily interview with Scott Penn.
Yes, health expert all round, football lover, owner of Manly Warringah Rugby League team, nice guy. Well worth listening to Scott. Obviously his business has done extremely well, but just how he runs it and how he thinks about the business itself, really interesting.
Yeah, I found it interesting about just how technology is now being used to underpin some of the biggest diets in the world, really well-known ones like the CSIRO Total Wellbeing Diet. And it's Scott's company and his technology that's being used to kind of build the platform for it. So it's a fascinating chat. It is up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. Thank you, Sean.
Thank you, Michael.
It's Friday, the 6th of May, 2022. Make sure you're following the podcast and join us online on LinkedIn, Twitter and Facebook. I'm Michael Thompson and that was Fear and Greed. Have a great day.